All right, guys, huge week ahead. We have CPI on Wednesday, PPI on Thursday. The FOMC meeting minutes are on Thursday, plus the earnings of the biggest banks, including JP Morgan, Wells Fargo, Citigroup, on Friday. So Bitcoin finally broke the $30,000 range. That was a nice pop, huge volume. You can see even your MACD has turned to the upside, which indicates that we could be leading up into this resistance zone and hopefully accumulating there heading through the week. Now, a little bit about the Fed balance sheet, because we do have CPI, PPI, and the FOMC meeting minutes. The Fed balance sheet fell by $73 billion to $8.6 trillion in this past week. Banks are starting to trim their emergency borrowing from the Fed due to stabilization in the banking system, right? When the Fed starts dumping money and opens up funds for banks to be able to pull from, it'll start to stabilize the banking system. Financial institutions drew $149 billion, down from $154 billion in the previous week and $164 billion 2 weeks ago. Decrease in the Fed balance sheet, primarily driven by QT, quantitative tightening. Now, at the same time, we have a miss to the downside of unemployment. Unemployment was only 3.5%. So stop pricing in the no more rate hikes. And please stop begging the Fed to cut rates this year, which we might see Feds cut rates this year. Something usually has to break. And they've already said that they expect rates to stay higher. Once they pause, they're not going to cut. They're going to stop at that. And this all is coming when Americans can't afford their mortgages. They're starting to get squeezed out. Debt to income ratio on FHA mortgages hit 44%, highest percent ever, even higher than the 2007-08 bubble. There's going to be lots of defaults, foreclosures coming for low-income homeowners. Now, this is something, and I've seen certain states are actually worse off than others. This is the average. I've seen that just regular mortgages for California are almost 50% of people's debt to income, and which is crazy. If anything happens, if you lose your job, or even if it's small, not small, but even if you have an issue with your vehicle, your car, right? If you're paying half of your income to your mortgage, to your house, just to live, then you can't afford anything else. Now, one of the things I want to talk about is the Bitcoin dominance chart. So real quick, with the Bitcoin actually running into $30,000, one of the things that we're paying attention to is the Bitcoin dominance. Now, something to remember, as we lead into the halving, your Bitcoin dominance goes up. And so we're at a local high. So you can see that we're trending up over the past year. And one of the things that we're getting close to is that one of the things that we hit and it slightly broke above is that $48 range. Bitcoin dominance is going to go up leading into the halving, and then people are going to take their profits from Bitcoin and then they're going to start putting them into alts. And that is what's going to kick off alt season. Alt season is not going to start until Bitcoin dominance gets back above 55, 60, 70. Okay, I don't think we're going to hit 70 like we did this last halving, but definitely it's going to get back into the 60s. It'll get back into the 60s, then it runs up, people take profits, they take those profits, they put it into Ethereum, they put it into Cardano. That's what leads alts into their runs. So remember, alt season's not going to start until your Bitcoin dominance goes up. And that's not saying that you're not going to have small runs coming off of these lows. People are dollar cost averaging into projects they missed out on. Now, if you've enjoyed these videos, give them a like. Subscribe to my channel. This is Chase with Chasing Diligence.